Let's connect with Vineet Bhatnagar to get a better understanding of the technical setup and the fundamental setup. Vineet, dive into the market internals. Things are looking slightly rusty for Indian markets. Foreign institutional investors are also no longer pumping in a lot of money. Do you think somewhere in the short term Indian markets have hit some kind of an wall?
I guess, one of the things that is quite evident is that the fresh money on a daily basis that was the characteristic in the month of March, both for the derivative segment as well as for the underlying cash market from the FIIs has slowed down a bit. But what is more relieving is the fact that there is no selling pressure that is visible. Yesterday and perhaps even the day before was surely characterized by a weak sentiment in some other emerging markets as well. For example, Brazil and Argentina were also looking a little weakish. This morning, Asia seems to be looking all right, and I think technically speaking, based on even the build-up of the puts around 6600 strike, 6620 or 6640 should hold for Nifty to then start showing some more strength on the upside.
Vineet, you were making the point as to how FMCG of late is seeing some build-up coming in. Do you see the cyclicals taking a bit of a backseat right now as the markets try and consolidate and perhaps the traditional defensives come back to the fore?
Yes, I guess if there is ahead of the election results, there is a trend to do the profit booking, then the stupendous price movement that we have seen in some of the mid-cap stocks from the capital goods and infra stocks, I think should come in under some level of price correction, and that is something that is perhaps becoming visible a little more. When that unfolds, I think the obvious trend to expect is a move towards accumulating some of the defensives. So that is what remains to be seen, whether this smart run-up that we have all seen towards 6800 for Nifty will fizzle out before 16th May as an attempt to do profit-taking and therefore remove the risk of the event day, or will it just hold on and the traders will keep on their positions to really play the price movement on 16th and the following Monday?
Vineet, coming on the India VIX, and India VIX is now trading at a record high. Do you think the underlying uptick in India VIX is a pure function of how the F&O markets are positioned because of the May 16th event, or the uptick in India VIX is an indication that markets could really cave in anytime soon? Because if volatility goes up, it always tends to bring the markets down.
Yes. I think we have seen that happening, not only in line with the way the VIX has moved up, and you just mentioned, but also the stark difference between the near month IVs as far as the ATM walls for Nifty are concerned for April, and then the month of May. So you must have noticed a few days ago it had shot up in May for 40%, and in the last 2-3 trading sessions it has come down to 32. There is still a very big difference in the ATM walls of Nifty, this month being 12 and next month being 32. Clearly it is surrounding around the event of the election results. There is no doubt about that, and market does take that breather or show a price correction when there are movements such as what we have seen in the last week or so for walls.
Vineet, election is still 1 month away. It's on 16th of May, today 17th of April. What happens to the market in the run-up to the election? We have numbers. We will see some global volatility. What I'm trying to gather from you, Vineet, is the following. How should one trade or invest in the run-up to the election result?
I think, as long as as long as technically speaking market does not, Nifty does not come down below 6620 and 6640, one should look at trading the market with this as a support and the recent hike towards the 6800 level as the upper end. There is a possibility that that this good feel factor or at some level the unreasonable sentiment of great optimism of a clear majority in favor of an alliance will continue, and it could continue up till 16th May, in which case keeping the long positions from the traders point of view need not be squared off and could actually be left open to book profits.
Vineet, how is it that you're approaching banks right now?
There is absolutely no clue that came out. We were actually struggling to see whether our trend is unfolding in large names like SBI or PNB, barring the fact that on the back of a great result, IndusInd Bank showed a 10% move in the open interest. Also, there was nothing that is visible in the PSU bank. So that is one thing. That is one segment that did not give any clues at all yesterday.
Just a couple of other stocks which are looking active right now, and I want to quickly mark them. HDIL, Unitech, Shriram Transport Finance, Adani Enterprises, Adani Power, Reliance Capital, India Cements, Just Dial. The trading screen, or rather the futures and options screen, I should say, pretty much looks like a mirror image of what we found in yesterday's trading session. Vineet, off late we've seen really traction build up in the election hopefuls, or rather NDA hopefuls, I should say, the likes of Adani Port, Adani Enterprises, Gujarat Gas, where there is no fundamental reason why the stocks should be going up. Would you advise investors or our viewers to at all approach these names?
Not really, because this needs to be played by those who have the appetite to get in swiftly and come out quickly as well. I think a common man on the street always gets saddled with a good trading advice, but no indication of when to cut the loss or book the profit. So I will actually stay away from making such recommendations. On the other hand, there was some strength that was visible in some names that we spotted yesterday. For example, Exide and LNG Petronet came up on our radar once again yesterday. Exide has been showing great amount of price momentum on the upside, but in the last few days there has been a price correction. But what was very noteworthy was that there is a great build up in the OI, and at 120 or 121 level it may be a stock to accumulate. Likewise, LNG Petronet also has indicated that its 5-day moving average for OI has been 25% up, and the price has not started showing a trend. So it is very likely that price will now start showing an uptrend in LNG. So these could be the names that we will recommend to our clients and to investors.
We need Reliance as well in the run-up to its earnings tomorrow. Is looking fairly interesting. A lot of fundamental experts as well have been calling their shots on Reliance, saying, this is going to be the one stock this year, irrespective of whatever happens to the gas prices. Are the futures and options activity and the technical moves really supporting that thought?
There is no weakness clearly that is visible as far as the RIL counter is concerned. At the same time, there is no clear long build-up that is visible. The convincing long build-up that we saw was actually in Reliance Infra yesterday. So RIL is not looking weak. Reliance Infra is actually looking very strong.
Vineet, so as we speak, what is your best long idea and what is your best short idea?
So the best long idea will be Biocon, Exide, LNG Petronet, Engineers India, and the short idea will actually be something from the IT space. So we would actually pick up a name like TCS, which I guess has already started showing some momentum in the morning today.
Engineers India, interesting one, because Engineers India It's a PSU stock. It is not a very liquid stock. What makes you bullish on that? The recent technical action or attractive valuations?
No, actually the attractive valuation for sure. I mean, the price in fact has moved up quite smartly after the listing. So if one were to look at only the price chart, one would actually hesitate. But we still believe that there is value in that particular stock if one has an 18 to 24 month kind of outlook. So EIL came up on our radar on that strength.
You know, Vineet, the last time we chatted with you about a month back, cement as well was looking like quite an interesting play. Of course, India Cement is a very risky bet amongst the names. But what about the rest of the basket? Do you still hold your bullish view?
Yes, even I don't know whether it was in a conversation with you, but we had pointed out India Cement also, and we had indicated that notwithstanding the fact that it is a risky play and it is one for braver hearts, but if the Telangana story were to play out, this particular stock is definitely going to benefit. So that was our take on India Cement. We still remain quite bullish about the frontline cement stocks ahead of actually a convincing economic pickup that we are all anticipating over the next 2 quarters. Shree Finance actually also looks good. We have been talking to the management and there is some confidence that our analyst has derived through those interactions.
Vineet, you talked about your views on Infi and TCS, but a lot of these mid-caps as well, the likes of Persistent Systems, Hexaware, Mindtree, they too are looking fairly buoyant, and that always is the case for the last couple of quarters, that, more than the large caps, money is made in the mid-cap end when it comes to IT. What is your preference amongst the entire IT sector?
Clearly the ones which are showing strength on the back of their business model, which is benefiting from the domestic market. So we do like Persistent, we do like Mindtree. Of course, it has run up quite smartly, but Persistent is indeed a name that we have been talking about for some time, and it does not suffer from its own weight, if you will, when we are to compare with the large frontline IT stocks. Their dependence on a particular geography is not that significant, and their product is such a niche product that we think that on the EPS front and on the price front, these stocks can actually deliver outperformance versus their sectoral index.
Vineet, I'm going to revisit IT because IT clearly is off balance once again. TCS down, HCL Tech down from the day's high. Vineet, what to your mind could be a right entry point to, let's say, revisit a TCS or a HCL Tech? For the moment, the season has changed and everyone is chasing momentum, but there would be price points when I'm sure long-term investors would revisit IT. What I'm trying to understand from you is that what would be that price point?
Okay, so I think through two management interactions from frontline IT stocks, the risk or the concern around a stronger rupee was not something that was pointed out as an area of concern by their respective CFOs. So I'm putting that particular thing aside. Of course, if rupee were to really, in reality, start appreciating towards sub 58 levels or above 50, lower than 58 levels, it will come back to haunt us again. But keeping that particular thing aside, I think the price point to enter into the frontline stocks have to be very selectively chosen. For example, if there is a consistent play in the economic activity in these Central Europe, we will start picking up actually Tech Mahindra. If there is a consistent pickup in some of the verticals such as financials and insurance, we will start looking at names like TCS. So rather than actually looking for a price point, I will be more guided by the clue that I want to see from the geography or the significant verticals on which the businesses of some of these frontline IT stocks are clearly dependent on. So that will be the way I will be looking at. Mind you, we are getting into a more volatile period, so to hinge ourselves on a price in middle of May for any of the stocks to guide an entry is actually going to be actually not a very sensible thing to do. So I will actually look for something which is more tangible rather than just a price on the slide or price as a support.
Okay, fair point. So Vineet, on 16th morning, or let's say on 15th evening, what should an ideal portfolio look like? How much exposure you think an ideal investor should have to defensives, high beta, momentum, cyclicals and banks?
I think in the last 4 weeks or 4 to 6 weeks in particular, there has been some rotation and people have built trading positions in the high beta cyclical kind of stocks. If there is only consolidation in the Nifty between even now and 10th of May, I would imagine that the temptation amongst these traders will be to start making their book lighter, and therefore it could become a natural outcome of the volatility or the price movement in the intervening period before 10th May, which may guide as to how much high beta portion or high beta exposure or cyclical exposure may be there on a 15th morning or a 16th morning. On the other hand, if there is support that comes in terms of price, broad-based Nifty or particular stocks between now and 10th, people will clearly keep their present positions open to play for the 15th or the 16th May outcome. My own sense is that as far as a broad thumb rule is concerned, we should still look at a 55-45 kind of a exposure. I know it is leaning a bit towards the riskier side, but the market seems to have shown its new phase of higher risk appetite. So 55 towards high beta cyclical stocks and 45 towards defensives, only if there is no change by 10th or 11th of May on the back of a price movement now.